Hi, everybody. Thank you for joining our webinar today. My name is Liz Keefe, and I lead our client account management team at Sikich. I speak for all of Sikich when I say we are very excited about our partnership with Gappify. I am joined by Billy Tamulanis, the director of our life science practice, along with Jotham Tai, the CEO of Gappify. Today, we will be going through accrual best practices for biotech and life science companies. When we think of who we want to go to market with in terms of partners or third-party applications, our clients are always the first that come to mind. We are constantly getting asked by clients, what processes within NetSuite can they automate, and what is everyone else in the industry doing to either automate the month-end close process or simply just make your day jobs a bit easier within NetSuite. With the help of Gappify, we've identified that clients using both NetSuite and Coupa struggle with the day-to-day accrual process. Hopefully everybody learned something today. I'll be recording this webinar and questions are welcome in the chat. I'll be quickly turning it over to Billy, who's going to kick things off, and then we will get right into Gappify's presentation.
Awesome, thanks, Liz. And so, before we get into the presentation, we just want to really hit on, why does Sikich love Gappify and why is this the right solution for biotech? To start, when we're talking about accruals, we know for your organizations that the volume of accruals is only going to grow, right? I may have worked with you in implementation, and a member of our team may have, but when you're looking at implementation or just coming, live onto NetSuite, most of you are just really leveraging CSV imports to automate the upload of the journal entry from an incredibly manual process in Excel, right? All the data capture, even building the entry in Excel, in Excel is manual, and you're really just saving time from keying the entry into NetSuite, right? So what may start off as a 50, 100 line entry for you all, it's going to rapidly grow. We have clients with 1,000+ line accruals. They may even have performance issues in NetSuite when they try to load it because it's come from one really big Excel model on its way into NetSuite. So so the Gappify is really going to help you out with that. But then, generally speaking, as biotechs, right, you're most likely public or thinking about going public one day, right? That really is the end goal. So the pressure is going to begin to mount for you all as you need to close the books faster for both the internal and then the external reporting. So really, any solution that brings automation to a month-end task helps you check that box quicker, and it gets you onto the next task. Is something that I think we all can appreciate. And for me, the automation is what excites me. But I can't forget to mention that, essentially, automation makes things more secure, right? And it allows for defined processes, and that's just going to help you come audit time. So lastly, and I'm ready just about getting ready to hand it off to you, Jotham. But this is the perfect addition to your NetSuite environment, right? This is not a big system that has functionality that NetSuite already has, that your procurement system already has. It's targeted, it has a purpose, and it's going to help you on a monthly basis. So with that, Jotham, take us away.
Awesome. Well, thank you, Billy, for that intro, and Liz, thank you to you and the Sikich team for having us today. Really have been very thrilled about the partnership with Sikich and just the opportunity to present today's topic to your audience here is fantastic. And obviously, hopefully for the attendees of the webinar today, I really hope you come away with some really good, tangible learning lessons that you can apply as it relates to your accrual process in your day-to-day.
Okay.
So before
you get in, I just want to make sure people can hear us. So if a few of you don't mind entering in the chat, if you can hear Billy, myself, and Jotham, I think that'd be very helpful. I just want to make sure the audience can hear us. Okay, they can hear us. Perfect.
Awesome. Always good to do a mic check before really getting going here. So thank you for that, Liz. So before diving into the actual best practices part of today's webinar, I'll just do a quick introduction of myself and also my company, Gappify. But basically, the reason why I'm so passionate about accruals is because I have lived it. So I've been in the accounting profession for 20 years now, started my career in audit and public accounting. Then I actually started my own Sarbanes-Oxley practice back in 2004 when it was all first starting. And as you can imagine, and for those that are familiar with SOX, what my team and I had to do was document end-to-end processes across all cycles. Of course, a lot of coverage over the years came in from the standpoint of GL and financial reporting. And that's where I really started getting the fundamental understanding of the mechanics of an accrual process across different industries, including biotech and life sciences. I spent some years also helping implement solutions like NetSuite, Coupa, and other point solutions in the market. So my team and I were also involved in implementing the first wave of SaaS products for the accounting profession. Spent some time in industry, spent some time helping companies prepare for their IPOs. But as most of you here on the webinar know, there are still a lot of processes that are manual, and they are a pain in the neck. So hopefully with today's session, we'll be able to, again, provide some valuable insights and things that you can take away to your teams. Really quickly on Gappify. So Gappify, we're an accrual platform, cloud-based, of course. And what we pretty much do for our customers is execute different types of accrual. We'll actually get into some of these details later from a process standpoint, but we can automatically execute vendor confirmations, automate open PO reviews, do calculated and accounting estimates based on historical averages and PO start and end dates. And of course, we automate the process of posting everything back to the JE. So that's who we are at Gappify. I've got many years of experience in this process and in this space, and really excited to dig in. And I'm going to focus on 3 areas, specifically, which teams should be the one responsible for accruals. Secondly, we're going to cover the different types of accruals, whether it's confirmation or open POs and so on. And then, lastly, we can get into some analytics on how to break down your process to figure out the right approach that works best for your team. Oh, and just a quick slide. So we understand, and this is such an amazing audience for us to talk to, because life sciences and biotech, and we have many great customers that can testify, and I think the folks in this room will do so as well. But it is not easy to accrue in this particular industry, and I wanted to highlight why. So I pulled out an S1 filing for a biotech company. This is recent, and I went into their MD&A, and I like to think that this paragraph really speaks to the gravity and the severity of how difficult it is to accrue for this particular industry. What you're dealing with in your space is a business that is doing a lot of research and development. So you're building brand new products and drugs. You're going through multiple stages of that cycle, and you can have multiple stages running for multiple products at the same time. There's a manufacturing component, there's intellectual property. So hey folks, you know what that means for us in accounting? You have all this dynamic types of business activities. We in the GL, finance, accounting team have to figure out how to account for it. So it is not easy whatsoever. You contrast that with something like SaaS, so we're a SaaS business. When you look at our spend profile, it's definitely got less layers than what you deal with in the biotech and life sciences space. In B2B SaaS specifically, most of our expenses are in headcount. Sure, we'll have G&A expenses, legal, accounting, and so on. And sure, we'll have Amazon or AWS and all types of technical charges. But the level of kind of industry knowledge that you need to account for this space properly is higher as a standard than other industries. So I just want to share this because my main point here is I understand the pain, and that's why we're excited to partner with the customers that we have today, and why I'm excited to talk to you today to hopefully help you navigate through these really complicated sometimes and voluminous processes. And so I'll get into the focus areas that I talked about earlier, but just some big picture thoughts that I think are important to tee up today's conversation. First of all, automation has to be part of the game plan, because the types of strategy that I'm about to share with you, you cannot really enable unless you are being part of that strategy, right? So if you're, in other words, stuck going from one month-end close to another because you're swamped with spreadsheets, you're swamped with journal entries, by the time you do your hard close, it's time to close another book, another month, you are not going to have time to be strategic if you do not have a tech environment that allows for more automation. So I know this is not You won't get pushback on this notion anymore. I know 5 or 10 years ago, around the time when I started my career, we were fine, just being business as usual and keeping the status quo and sticking to spreadsheets. But I really want to emphasize this point before we really dig into accrual processes, because if you don't have a strong ERP, if you don't have a strong P2P, a lot of the things that we are about to talk about, being data driven in terms of like figuring out how to accrue and when to close books and when to close AP, you cannot really make these informed decisions without the data that automation systems provide. And as I mentioned earlier, you will not have the time to do this analysis if you are just busy, trying to dig your head out of the sand from one month end close to another. And of course, this is a good time for me to also, and this is a recommendation, a standing recommendation, in fact, that I like to share in the webinars that I'm in. Please, as you're working through your automation upgrades, don't do it alone. Do it with partners if you have the resources. And if you don't have external help, then you just got to make the time and maybe partner up with someone in FP&A in your accounting team to help manage the capacity. But I understand and recognize that investing in automation takes time. So to the extent that you can leverage trusted partners like Sikich or anyone else amongst your team, the more successful you're going to be. And then lastly, I'm very passionate about this because I come from the industry myself. Whenever you close your books and you don't have significant misstatements or issues, we have to celebrate them, right? So I know our jobs really lends itself to just being in the spotlight when something goes wrong, right? So if we miss an accrual entry or we have some kind of SOX control issue, that's when they're going to know about Jack, the GL manager. But it's up to us, especially if you're in a leadership capacity. Let's celebrate the wins, and with the accrual specifically, because nothing is talked about in terms of errors or misstatements, doesn't mean we have nothing to celebrate about. So my first bullet here, I think if you're a calendar year end, and if you went through your audits cleanly, no material accrual issues, please take a moment, celebrate those folks in your team, because especially in this industry, the biotech and life sciences industry, how hard it is to get this right. So take a moment and give them a high five, shoot them a shout out on LinkedIn. And I think a more engaged accounting team who is appreciated for doing accruals properly will be more effective about taking that on in future months. So I know this is not a very tactical and technology driven recommendation, but I do passionately believe the power of celebrating accrual wins. So if there's one key takeaway from this call, I hope it's that is definitely one of them for you. Okay, so let's talk for a moment about why accruals are important. Obviously, the name of the game is we don't want to restate financials, right? So if you're a publicly traded company, 10K refilings or restatements are one of the worst things that we can encounter in our accounting careers. Now, you might be thinking, oh yeah, that will never happen to me because I've never heard anyone else go through it. Well, the data will speak to how common this actually is specific to accruals. So in 2021, a firm did a study on the number of restatements that there were in the year, and they attributed accruals as the number 3 reasons why companies have to restate with the SEC. So, again, you may have been in an environment where you haven't had as much exposure to issues, but I think if you ask enough friends in your profession, this is real. So this is important, and we need to put the right effort, resources, technology to make sure we're successful with accruals. Secondly, this is more of like a practical one that was near and dear to my heart when I was still in the profession and booking these entries. When you're going through year end, you went through a rigorous year end close, you're going through your financial audit, and then you get hit with an additional sample size of 30 or 60 because someone does a subsequent disbursement test and finds an issue with an accruals, and you have to keep layering in more samples. Obviously, there's that aspect to making sure accruals are accurate and complete. And now that I run a business, The P&L visibility is important. The P&Ls drive a lot of our management team's decision on how to invest resources into different parts of the business. If a new R&D expense hits our books this month for something that we incurred 6 months ago, that is going to impact the nature of how we think about attacking different markets. So there is very real reasons why accruals matter. I know sometimes on the accounting side, like our mandate is just to book the entry, check off that line item on the month-end close checklist. But I do think it is powerful when accountants kind of see that their contributions in getting this right have a broader business impact that really, really matters to the business. So I can say that now, being in a management position, it is important. So don't understate the importance of your efforts to getting accruals right and how it translates into wins for your organization. Then lastly, this also gets overlooked quite a bit. So accruals, of course, we talked about why it's important to get right, but if you can do it right and you have a good process, this is one of the biggest levers that you have to closing your books earlier. So what do I mean by that? If you're closing the books right now in 7 days, that's probably because you're waiting for a lot of actuals to drop in between day 0 and day 7. But if you have a good accruals estimation process, and of course, that's just one of many other items that happens in a close. I'm speaking specifically for accruals. If you have a strong process and you have strong confidence in your accrual estimates, you can pull that in. So this is where you should feel really confident about pulling your 7-day hard close to 3 or 4 days, because you have a good system and mechanics in place to accrue every month. So a lot of the customers that we talk to, this is one of their drivers why they upgrade their tech stack and why they go with Gappify, the ability to put them in position to close their books faster, which means for all of us on the accounting team, I mean, we all know this, the longer the close gets drawn out, the harder it is. So I know CFOs mandate shorter closes because they want financial information quicker, but it also benefits us because I would rather have a 3-day close just from a fatigue and stamina perspective than say a 15-day close. And last but not least, this is a graphic, but gosh, when accruals go wrong, I think for the folks in this room that are in charge of it, when something gets missed, it's just painful for that to point back to the hard work that we do on the accounting team. So if this graphic itself is another inspiration in itself to take accruals seriously, I hope it's effective in that way. All right, so with all that background aside now, let's focus on accrual ownership. So I like to start with this because before we even talk about process mechanics and types of accruals, the who is very important to think about. And gosh, I have been around, I've consulted, audited, and been around, 100+ different environments now. And I know the standard answer to why is AP or FP&A doing accruals, and the answer to that is typically, well, we've been doing it that way since forever. So I guess my point in that is don't revert to or don't fall back and default to just keeping things the way they are because that's how it's always been. Be strategic about it. And so hopefully this slide or these next sets of slides will kind of give you some tools that you can apply to figure out who the appropriate owner is. All right, so first up, FP&A. We talked to some customers where FP&A is the one driving the process. In some cases, they're actually the ones booking the journal entries. I have different perspectives on that as a SOX professional, but every environment's different. So we see that from time to time. But I do like FP&A in cases where they are already engaged with your business partners. So if FP&A already is having a very clean and consistent cadence with marketing every month, well, hey, if you're talking to them about budget and other FP&A things, might as well ask about accruals at that point in time. Now, one thing I have seen, and I'm adamantly not in favor of, because again, I come from an audit background, booking or having FP&A calculate accruals based on budget is not good, right? And I think for us CPAs and very purist accountants, We know that budget does not represent expenses incurred, but in some cases I have seen where for some reason or another, there's just such strong confidence in budget that that's what gets accrued. If FP&A is doing that, I would ask questions, and so keep that in mind. But again, there is a reason why in some cases FP&A could be in better position to do accruals, and I would point to the former point, not the bottom one. In some cases, we have accounts payable owning the process, and we see a pretty good mix. With accounts payable specifically, I see that being very effective when your AP team have very strong relationships with your CROs or different types of vendors. So if they're already engaging regularly with them because they're asking a lot of invoice questions, maybe the pricing or invoicing model varies, and AP is required to be more involved in the in the exchange of the invoice. This works out well because the name of the game is to be able to get information very quickly and timely during a month-end close. So why not, if AP is already engaged with your vendors, why not have them support the accrual process? One important thing to note, obviously accounts payable, many have a GL background, so know how to do manual journal entries and do debits and credits, know the allocations and the importance of booking the COGS versus OPEX. If they don't, please keep that in mind. If you are having your accounts payable team do this, be mindful that the GL aspect of this is quite important. And last but not least, I know certain environments and certain kind of internal control programs frown upon AP, someone who has access to do payments, to book journal entries. So keep that in mind as well if you have accounts payable as a partner in your accruals process. But really, the home for accruals, from my perspective, and this is from years of experience and just talking to a lot of different customers and controllers, general ledger should be the default, right? So unless if you have good reasons to go with FP&A, unless if you have good reasons and want to go with accounts payable, general ledger is really a good kind of cornerstone for collecting data from the business, having the discipline and the expertise to know where debits and credits go. So keep in mind again that I know specifically that certain shops have certain owners own accruals because that's the way it's been done forever. But keep these points in mind, and maybe you revert to still the same party that's doing accruals now. But I really do think positioning your process to be performed by the right team is fundamental to running a strong accrual process.
Hey, Jonathan, I have a quick question, if you don't mind, before we get to the next slide. Question that just came in. Aren't accrual teams still going to be waiting on inputs and reports from the CRO, CMO, as well as internal PIs? Accruals completed between 3 and 4 days seems unbelievably fast.
It is, and that's where actually the next section talks about the different types of accruals and speed and how to calibrate for that. So I'll expand when we get to that slide. But just know that there's a lot of, it depends. Like it depends on the nature of your spend. It actually depends on also the nature of the life cycle of your product and drug candidates, right? So in certain stages, that might be too fast. Maybe in when it's more mature and you're in the commercialization phase, then it's a bit different. So I will cover that in more detail. 3 to 4 days, actually, some customers will call it fast. We have some customers that will call it slow. So there's a lot of factors as to why that number is fast or slow relative to the organization. I will say though, 15 days is too long. So at least we know what kind of outside limits there are. Great. That was a great question, and I promise we will definitely double click into that with this next section. One thing too, and again, this is not a technical recommendation, but I really do believe in the power of people. And technology is really just supposed to enable really successful and effective professionals like us to do our jobs. So yes, I gave you a kind of a technical rationalization on who should own what, but think about this process, accruals process, because it's critical, again, for the reasons I mentioned earlier. This is a team effort. So whether you've got FP&A assigned, AP, whether you're actively engaging your scientists, internal scientists, or external ones, this is a team effort. This is not just like an accountability, like, oh, I got to do it, check the box. So don't make it transactional, make it collaborative. I have seen that be kind of an effective mindset into people's psyche and just their engagement level when it comes to supporting a strong accruals process. So don't underestimate the power of people. Again, I know not very technical, but as you can tell now, I'm a big proponent of that. And along those same lines, there's definitely a way to enable these recommendations that I'm sharing with you and presenting with you. And there is a way of rolling it out that I have seen be successful at with our customers and also over my time as an auditor and consultant. But really, when you look at making changes to a process, like who should own accruals, be strategic about it. So on the left-hand side, strategize. Like, spend the time to really figure out like why someone needs to be the person or the party owning accruals. Once you went through that very objective rationale of who should do accruals, then solidify it. So obviously there's very natural ways to solidify it, i.e. assign the month-end close checklist to that person. But if there's some kind of process documentation that's going to help solidify who is in charge of what, and if that's something you can socialize in a broader group. And by broad, I just don't mean finance and accounting. In some cases, depending on the volume of your activity and how critical your accruals are, you may want to socialize who's in charge of what, even to your business partners and to marketing, G&A, and so on. So I like to simplify some of the suggestions that we have. I know we're covering very dense areas with accruals, but if you think about these 3 S's, they will come up again. But with any kind of process change that you're considering, strategize and solidify and document and then socialize. I think these are good frameworks in mind, a very simple framework in mind to be successful at deploying new processes. And just doing a quick time check here. Looks like we're pacing well so far, and feel free, please, to shoot over questions in the chat room. I know we have a pretty big audience here, and I know I speak pretty quickly, but I am, as you can tell, passionate about this topic, so happy to answer any specific questions that our attendees have today. All right, so the second focus area that I will cover in this presentation is the types of accruals. Accruals is such a big and broad term, but there are definitely different ways to collect them, right? And I know this is probably very familiar to everyone, but I do want to take a moment to just explain each one in detail, because we're going to take it another click down afterwards and talk about how to think about how to calibrate and choose the right type of accruals depending on the class of vendors that you have. First one is your classic vendor confirmation. So these are emails. So Gappify automatically sends them for customers based on vendors that fit a certain criteria. Basically, this is a process where you reach out to your vendors and say, hey, how much do we owe you? It's now March, and we did a month's worth of work in February. Hey vendor, how much do we owe you and how much have we incurred? So that's your standard confirmation. Open PO review for those that have a P2P and PO system. If you don't, I highly recommend it. Actually, it just creates a lot of discipline, not only in spend management, but helps with downstream accounting activities like accruals as well. But with an open PO review, as the name implies, you take all your open purchase orders, you talk to or email the PO owner, and you go through each one and say, hey, does PO one have any other unbilled expenses against it? And lastly, if confirmations or open PO reviews are not effective or they are not happening, of course, we are still in accounting accountable to providing an estimate. So sometimes we just have a spreadsheet that we roll forward, and maybe we know enough about the nature of the spend to be able to put together a quick calculation on what the accrual is. So those are the different types of accruals. And I will now talk about which ones are best depending on different types of considerations. I'm going to do a quick pause and take a sip of tea, but we will get into more details here in a second. Okay, that was refreshing. Thank you. Okay, so we've got those three classes of accruals that I mentioned earlier. From the standpoint of accuracy, and this should be pretty, this should be common sense, right? So from an accuracy standpoint, if you're getting that unbilled estimate directly from your contractors, your external providers, your CROs, yes, that is the best estimate that you can get, right? Because ultimately that vendor is the one that's going to send you the invoice. So the reason why auditors and me personally too, I like confirmations, is that you get the number from the source directly. Secondly, with open PO review, it's still a good level of accuracy if you can get, again, your R&D director or internal marketing director to say, hey, I owe $1,000 against this PO because I was working with that vendor over the course of the month and I have a pretty good sense of how much I spent. It's medium and not high because the vendor can disagree later and say, oh no, you actually need to consider this other line of service that we did. You may not have heard about it. So yeah, there's still some risk if you confirm with your marketing director that, or any kind of director, that there could be an amount left out because the vendors ultimately know what the charges incurred are. And of course, with the accounting estimate, it's not quite like just closing your eyes and picking a number. Of course, like we put a lot of rigor into our estimates. So I know some of the techniques that we use in accounting can either do some kind of historical average, look at run rates and so on. Also, we in accounting can maybe estimate based on start and end dates or contracts on what an accrual is. But of course, a confirmation-based approach is going to be the most effective in terms of accuracy. And the second point here, in terms of audit reliance, I mean, it obviously aligns with the accuracy level. So the more you lean in on confirmations, the higher the reliance is on, or the higher the quality is of the documentation for your auditors. So that one should be pretty self-explanatory. Let's talk about speed. So to the question earlier, speed, there's a lot of variables involved. And so I'll talk about them. There's no one size fits all approach. So my approach with this webinar and this slide specifically is just to talk about the different perspectives and the different options out there. Ultimately, speed is dependent on a lot of internal factors. I'm going to start with vendor confirmation. Vendor confirmations can be fast or they can be slow. They are very slow when accounting teams are not emphasizing urgency. And believe it or not, and this is something I've had come up and also something I'm vocal about sharing with customers. Believe it or not, if you are managing an accrual process, you have a lot of say in terms of getting your vendors to get on board with an accrual confirmation program. What do I mean about that? By that, we have some customers who are very adamant that if they are not going to get their accounting estimates by day 2, for example, they will hold back payment. So I don't suggest that for every company. Obviously, having strong relationships with your vendors is very important to your business partners. But to the extent that vendors are not complying, you do have the power of the purse. Keep that in mind, because we do tend to see that accounting teams who emphasize the importance of timeliness with confirmations get the responses in quickly. They can close their books in, or they can book their accrual JEs in 1 or 2 days. So keep that in mind. You have a lot of power. And of course, there's a strategic, diplomatic way of asking for compliance on the other side. But at the end of the day, you are the customer. The vendors are eager for you to pay them. And so to ask them to do a little work at the end of the month, obviously from an accuracy standpoint, that's also ideal. So keep that fully in mind. Speed with open PO reviews, similar concepts. So CFOs who really strike fear into business partners about not approving POs unless there's compliance with the confirmation process. We see obviously that being faster than others. And of course, when it comes to us, the accounting team, just calculating accruals ourselves, I mean, we don't have a dependency, so we can just whip up a spreadsheet and get it done. That's typically going to be the fastest, but keep in mind, from an accuracy standpoint, we compromise that. Coding accuracy, I think this is also quite straightforward, but so I'll just quickly talk through this. Vendor confirmation, if you're doing business with the vendors regularly, I would call it media because of that. I mean, really the call out here is the open PO review. Open PO review is amazing for coding accuracy purposes because coding's already provided for you. And in a lot of cases, if you have your POs approved by FP&A, the volume of reclasses and coding adjustments post JE obviously go down quite a bit. So now that you know the different considerations and the different levers to pull, in a perfect world, you can take one of these approaches and apply it to your entire vendor base, right? So in other words, if you could do vendor confirmations for everyone across all vendor classes and departments, yeah, sure, that would be easiest. But that is not reality. So the way we advise your customers to look at the strategy when it comes to choosing what types of accruals to deploy is by segmenting. Okay, so I'm going to give some examples of segmenting, but keep in mind that there's no one right way to do this. I'm just going to share some ways that I've seen with our customers and over the years and designing these processes. So one natural one is subsidiary. I know in the biotech life sciences, that's probably not as prominent as some other industries. But if you do have multiple business lines or legal entities or international operations, maybe there are certain types of accrual types that work better for others. So this is an example. Maybe your parent company, you do vendor confirmations, but maybe a subsidiary is not material enough. So why even do confirmations? So being strategic about these segments and the different types within it and picking the right type of accruals is a really effective way of getting that right balance of speed and accuracy. Another layer, our department. So maybe R&D again for biotech and life sciences. It's heavier and maybe the vendors are responsive. So you may want to lean on vendor confirmations for that group. And maybe for G&A, you want to do the same thing, but keep in mind you have different options, so you don't have to use one approach across all vendor classes. And this is when maybe you can apply different classes or categories of vendors. So if it's an HR contractor, that could be different from a CRO. PO confirmation maybe is more effective for one class and not the other. But do take a moment to take a step back and figure out what your strategy is. This is where CPAs and people like you and I on this call need to apply our technical expertise, right? So we talk about, and I can do a whole nother webinar on this, by the way, and the shortage of accountants in the field. A big driver for that is that the newer generation of accountants, they don't think they're being strategic enough because they're pushing around spreadsheets, and without automation, that's going to be the reality. But this is where we really shine as an accounting team, and as for some of us who are CPAs, this is where we add value, right? So for us to be able to look at the different segments of the business, if we have enough understanding of what's happening with the business, and for us to pick the right types of accrual approaches for each one, this is where we can add a lot of value for our teams. And so, there's no one size fits all approach. It's not supposed to be that way because that's where we're supposed to use our brains in preparing these types of exercises. So, the takeaway here is take a look at what you're doing with accruals today and do your own segmenting, figure out whether you've picked the right type of accrual approach for that vendor segment. And chances are, again, it'll revert back to, oh my gosh, we've been doing vendor confirmations for everyone for so long. Let's keep it that way. That is not the right answer. Be strategic. Go back to this table, figure out what the right levers to pull are to get the type of result that you want for your accrual process. All right, and again, just another reminder, be intentional. Look at the data. If you are using NetSuite or even SAP Oracle, you should be able to get data on different classes of vendors that you have from your vendor records, do some level of analysis. And once you figure out the right strategy, solidify, memorialize the process, and then socialize it within the group. 3 S's, taking this approach is a good change management recommendation. Last, but certainly not least, timing. And this also ties into the question earlier. What is the right time to start your accrual process? When is the right time to close it out and record your entries? So again, there is no one-size-fits-all approach, except I am very passionate about this. If you can, and only with a very few exceptions, you should only start your accrual process after AP is closed. And yes, I totally understand the itch to want to do it earlier, because if you're reaching out to so many people, by doing it earlier, maybe you can get ahead of the avalanche of work that you have to do when day 0 comes. But you're actually creating more work for yourself typically when you do that, because if you reach out to your vendor or internal business partner, or if you do your own estimate even, if you do that on, say, the 28th day of the month, and if you close AP on day 1, well, guess what? When you booked or collected the data on the 28th, you may have gotten that invoice in current period, in that 3-day gap. So now you're having to do a reconciliation. And guess what? Reconciliation is another hurdle that you have to get through before booking your entry. So you're really creating an unnecessary recon work that you can avoid by just waiting until after AP is closed. This is particularly important for confirmations, right? Because if you're reaching out to your law firm and your CRO, and you're having them provide percentage of completion or milestone-based billing estimates, well, maybe there's an invoice already sitting in the inbox. So if you're going to ask them to provide an estimate and it's already coming, then you now have a new item to reconcile. So this is something I've seen processes really make processes clunky from an accrual standpoint. So I influenced the graphic there, or I found the graphic itself. I wanted to make sure there was that red stop because this is so important to the success of accrual processes. Now, when can you close AP? Of course, surprise, surprise, no one size fits all approach, but let me give you some considerations that you can take back to your teams. And again, you have to put on your strategic hat. I'm a big proponent that accountants, my fellow peers and colleagues in accounting, we should all be more strategic. So let me give you some tips on how you can apply that. One is by looking at your coverage of invoices and what day they come in and what the dollars amounts are. So let me give you actually a spreadsheet here, a table, and an example of something that we've assisted clients with. So what you can do is maybe take a look at the invoice processing volume over the last several months. And if you can quantify it, again, you need a good system like a NetSuite, SAP, Oracle, or Dynamics, and you need some kind of major ERP to be able to do this. If you do not have one, please tech up and find a tier 1 ERP. But if you have an ERP, you have this data, this is a really good analysis that will help you justify why you close AP a certain day. All right, so what we have here as rows are the months, and what we have as columns are when invoices are created in your system. Right, so as you can see here, there were 600 invoices that were vouchered before the close started. And then we quantify what that is in day 1, 2, 3, and 4. What we want to be able to do is to quantify how many invoices came in at what point in time in the close. So the 66% means we got 66% of invoices vouchered in our system before day 1. By day 1, it increases to 71%. By day 2, increases to 75%, and so on and so forth. Now, I know one question that will come up is, well, when you look at this, when should we close our books? I'm gonna have to say it depends again, because there's so many different risk factors. I'll talk about some of them, and they will revert back to the last slide. But keep in mind that 85% coverage, and you can also do this based on dollar amount, by the way, so that's another kind of data point that you can triangulate with. 86% could be good to close AP in day 3, or maybe you're comfortable enough with 66%. So there are other reasons, and as I mentioned, I'll talk about them next. And because I did these slides, it's a great segue to this next slide here, which is the considerations I mentioned previously. Historical issues should be one of the biggest drivers for determining when to close AP. There's a human element to auditors and the way we approach decisions that are made by accounting teams. And what do I mean by that? So if your auditors just wrapped up a 10K audit and struggled and had to work really late at night because there were exceptions to subsequent disbursement samples that they picked out, and then next quarter you let them know that you're pulling up your close from day 7 to day 1, that may create concern, and there's that recency bias involved. So yeah, this is not like technical, this is not like algorithm based, but keep in mind that in order for your management team and your auditors to buy in on when you can close AP and when you book accruals and so on and so forth, keep in mind that your historical issues are part of the psyche of determining that. Now, flip it the other way, right? So I'm going to use absolute terms that I know are not realistic. If you have never missed an accrual ever, but you're closing AP on day 5, and actually I had a customer, not BioTech, that had the situation. They had minimal issues with accruals, but they were still closing AP in day 5 and booking their accruals in day 7. I mean, pull it up. Like, well, let's pull up the AP close, and maybe not by 5 days, but maybe 1 day at a time each quarter. So, if you don't have historical issues, in other words, use that as a basis for pulling up your close. And as we all know, if we can move up our AP close, we can then move up when we book fixed assets, prepaids, accruals, and so on. So it shifts the overall close, at least on the GL side and on the OpEx side earlier. So keep that in mind. Of course, the nature of your business is, and I talked about the different stages. So with BioTech and Life Sciences specifically, there may be different stages in your product's life cycle. So if you're in the preclinical stages, maybe there's more consistency, or maybe not. But if you have dynamic spend happening, we would recommend closing AP later and starting accruals later. But if there's more maturity because you've gone through the commercialization stages and now are public, selling the same product, then if you feel confident enough, pull up that AP close and pull up your entire close based on that criteria. Lastly, this actually gets overlooked quite a bit as well. And I know there's still a lot of variety in terms of comfort level by internal and external auditors and management on this concept, but we do see a mix of customers who lean on reserves as if there's a robust way of calculating accrual reserves or general reserves. And I know the term is different in each organization, but if your auditors are comfortable with that methodology, then of course, why not see if you can move your close earlier, because you can fall back on those reserves. I know some organizations and their auditors are not comfortable with reserves at all. So if you don't have a reserve, forget about number 4. But if you do have that as something that you're doing today, that could be a reason about feeling good about moving up your AP and accrual close by a day or 2. And for the last time, keep in mind the 3 S's. So when am I going to close AP? When am I going to start recording accrual journal entries? Be intentional, be strategic, be data oriented. I showed an example earlier. And then once you figure out what that right cadence is, make sure your team knows about it, solidify it in the memo, procedures, and so on, because the more communication, the better, especially in very dynamic environments like biotech and life sciences. All right, and look at that. As an account, I pride myself on being punctual and being close to time and not running over. So naturally, we are now at the last slide here. This is the recap of today's conversation. So if you'll remember, 30 minutes ago, we started with figuring out the right way of thinking who should own accruals. Secondly, thinking about the types of accruals. Is it confirmation, open PO review? So there are definitely a lot of different criteria that you need to think about in determining that right approach for the right segment and class of vendors. And the former slide that we just went over was when to start your AP close and accruals. Again, a bunch of different factors. I know I've overused the expression, it depends, it varies, it depends on the organization, but that truly is the reality of the world. But this is where we accountants become really valuable for our organizations. So because there's no copy and paste approach in accounting, it puts us in a position where we need to be strategic to figure out the right process and the right approach for our unique organizations. And again, I can appreciate how challenging it is for biotech and life science accountants because the nature of the spend is just more dynamic than in most other industries. So please invest in automation, whether it's ERP, P2P, and so on. Be strategic. And if you remember from many slides ago, celebrate those accrual wins because it takes a lot of work, as you know, to get to accuracy and completeness. And so anytime that's successful, we should high five each other and give ourselves a pat on the back because it is not easy. So that concludes the presentation, and thank you, everyone. Liz, are there any final remarks before we wrap up?
Yeah, Jotham, I think if just a few minutes spiel on, to go into a little bit of the actual Gappify product offering, maybe?
Yeah, absolutely. So at Gappify, we focus solely on accruals. So what we have is a cloud-based platform where teams can collaborate and actually see the vendors that they have in scope. So we'll actually integrate with your ERP system, we'll pull your vendor records, and you'll be able to see spend history by vendor. And of course, the part that our customers love about Gappify is the ability to execute some of the things that we talked about today. So automatic confirmations to your vendors. I know in biotech and life sciences, a lot of those confirmations have to be, you have to have a component of milestone-based billing or percentage of completion. So we have customizable forms that will allow your vendors to seamlessly provide that information. And of course, we can automatically post journal entries back to NetSuite or SAP Dynamics and so on.
All right, great. Well, I don't have any other questions here, but just want to thank you, Jotham. Thank you, Billy. And for everyone who was in attendance, we really appreciate you taking the time to learn a little bit more about, the accrual process as a whole. And if anyone is interested in seeing a demonstration of the Gappify product, please feel free to reach out to myself, Chelsea, or Stacy, your account manager at Sikich, and we'd be happy to connect you, with a rep from Gappify. So, thank you once again, everyone, for joining, and hope you have a great rest of your day.